Morning, everyone. Just wait for another minute, maybe, to let a couple of more people to join. Right. Again, good morning, everyone. Before we start, we'll begin the session with the UAE national anthem. Taha, Infa. Right. Good morning again, everyone, and welcome to our webinar, The Future of Audit. My name is Frances. I'm audit partner of Crowe. Thank you for joining us today. A quick introduction on the topics that we will cover. As we know, UAE continues to position itself at the forefront of growth, innovation, and transformation. And as the business environment around us evolve, our profession must evolve with it. Today, audit is no longer about looking back and providing assurance over what had happened. Increasingly, we are asked to look forward, understand emerging risk, embrace new technologies, respond to regulatory expectations, and deliver assurance that remain relevant in a faster and a more complex world. And that is really the focus of our discussion this morning. What does the future of audit look like, and how do we prepare for it? So over the next 45 minutes, we will be exploring some of the developments that are already reshaping our profession. We will look at AI moving from hype to its practical reality, the increasing focus on audit quality and regulatory scrutiny, the move towards continuous assurance and real-time reporting, and the growing importance of internal control over financial reporting. These topics might sound very different, but they're actually related and connected. The technology, obviously, it may change how we do the audit. The regulatory expectations continues to shape how well we do the audit, and then the developments in reporting and internal controls are changing when and where our assurance is needed. Our role as auditor is ultimately to provide assurance on the information and systems and processes behind the information. But over the time, the tools may evolve, but our responsibility remains. So with that, let us begin our discussion on the future of audit and what does it mean, and the changes in our professions, our organization, and of course, the businesses that we serve. So welcome again, everyone, and I hope you enjoyed the session.
Good morning, everyone. Thank you, Ms. Francis, for the introduction. To introduce, I am Fahima, Audit Manager at Crowe. I would like to begin by thanking everyone for being here. And I hope this is a very insightful session for everyone, and we all get to take away some knowledge by the end of it. So the topic that we are going to be talking on is the AI from hype to reality. The actual shift in the conversation of how the next big thing is going to be AI, to the AI, in fact, being very much part of our daily lives, be it both personal and professional. Now, with AI being in professional lives and being used in generating financial information, it creates or it comes with its own risk. And there are a couple of risks that I would like to touch upon today here in this webinar. The first one is the control. So, the best approach for every organization in itself is to understand what or which AI tool best fits their goals and to adopt it officially, and to also establish some frameworks and ground rules which clearly defines the people who are using it what is allowed and what is disallowed and what all requires approvals. So, this in itself is going to disallow unauthorized use of AI tools in their professional lives and also leakage of data, and it's going to ensure data privacy. Next is accountability. Uh, it brings the very biggest question: who is actually responsible? Um, is it the AI tool? Can we even question the AI tool if something happens? Definitely not. So it is always the individual, and it is the individual's responsibility to vet the information that is presented or released, so that we'll have to ensure that it contains sufficient information. Any report contains a sufficient information, and there is also not oversharing of the information in the report. Next would be the quality. So every person has to shy away from the fact or the assumption that anything generated by AI tool is perfect. Definitely not. So you have to understand the AI tool, and you also have to understand that it can only produce report from the data that it is fed. If the data is insufficient, inaccurate, of course the report is not going to be perfect as well. And also, I would like to emphasize this is an ever evolving or changing environment. Though it is new, there are a lot of updates keeping coming up on a daily basis. So every organization should revisit this and to see where it fits in their process or the controls already in place. If it is bypassing any of it, and how they can update it to ensure that there is proper compliance. Now, tying it to it, auditor's responsibilities has always been the same. To ensure it is free from material misstatement and to obtain sufficient and appropriate audit evidence to form an opinion. Now, with AI here, it doesn't shift to auditing the AI tool. No, we are not going to change and audit the AI tool and then see where the gaps are. We are again going to see or do the same things, but with the mind that these financial informations are being prepared by the AI tool, and accordingly modify our questions and audit approach to fit these things. I'll sum it up here, and I take great pleasure in introducing our guest speaker, Ms. Zainab. Ms. Zainab has more than 14 years of experience in internal audit, compliance, enterprise risk management, and financial crime risk management. She's also a certified internal auditor, and her experience is going to get a great value it. And I hope we can hear from her what more regulators are saying about AI and use and other things. Over to you, Ms. Zainab.
Thank you, Fahima, for this introduction. And of course, AI is no longer future concept. It is already transforming the way organization operates, make decision, and manage risk. As an internal audit, this transformation create both an opportunity and a challenge for us. As AI can make internal audit faster, but it cannot make internal audit accountable. If an AI tool gives an internal audit the wrong answer in 30 seconds instead of the right answer in 3 hours, have we actually improved audit efficiency? No, the AI changes the speed of auditing, but it doesn't remove the auditor responsibility for professional judgment, skepticism, and assurance. I admit now that AI has changed our approach. We are using it now in reviewing large transactions population, identifying abnormalities, summarizing policies, procedures, sometimes um, drafting our RCMs or internal audit reports. But every efficiency gain creates a corresponding control risk. The risks of using AI for these areas are like data confidentiality and the privacy, as Fahima has touched this point. An auditor may put into an AI tool like customer information, medical claims, employee information, financial data as well. But are we allowed to use these tools? We are not allowed to give all the AI that data in the first place. We need to discuss the data classification, approved AI tools, access controls, retention, encryption, third-party processing. And from my experience, I can see as well some risks in hallucination or inaccurate output. So AI can produce an answer that sounds extreme professional and but completely wrong. This is maybe from misinterpretation of some regulation or incorrectly identified control deficiency. So the AI output audit evidence only after it has, yeah, should be taken into consideration if it has been independently validated by the internal auditor. So many cases it is not evidence at all. You should validate from your side as an internal audit. Also, the bias in some data. Imagine AI is analyzing some claims or customer data or transactions. These data contains like sometimes historical bias from like in insurance sector from underwriting perspective. So all the results will be on the same scenario. AI can reproduce or amplify the same bias. So this over-reliance of automation and bias makes the internal auditor lose his biggest talent, which is um, criticizing or challenging the management. Like AI should therefore be a co-pilot, not the auditor. Human judgment must remain essential for us. From the regulatory perspective, I can see that the CPUE is very active in their requirements. I should refer to the CPUE current AI guidance for licensed financial institution that was issued in February 2026. It applies to all LFIs, including insurance provider. This guidance focuses on using of AI, particularly where consumers may be affected. So they are highlighting a lot. I prefer everyone go into details to this guidance. So it highlights transparency, importance, accountability, bias, ethical consideration, and data privacy issues. So from this, most important for internal audit, that the CPU expects AI risk to be incorporated into the institutional enterprise risk management framework as well, rather than treated as a standalone technology. So CPUE is not simply asking whether you use AI or not. They are increasingly asking whether you can demonstrate that you govern, monitor, explain, and challenge the technology that's issued and used in your company. So from my perspective, internal audit should take this into consideration and should take this in their audit program in assessing their annual risk-based audit on annual basis. So from the governance perspective, do we have approved AI policy clearly assigned ownership? As auditors as well, we are expected to understand the AI system, including data inputs, decisions, logic, assess whether these modules are transparent, explained, and aligned to the regulatory requirements or not. As well, strong oversight of data governance is required to ensure data used in AI system is accurate, complete, secure, and compliant with data protection and privacy regulations. As auditors as well, we should evaluate the AI model risk management frameworks, including model development, validation, deployment, and monitoring, bias detection, fraud detection as well. Moreover, cybersecurity controls and third-party risk related to the AI system as well, including shadow AI system used. So continuous assurance over ethical and responsible AI use, including fairness, transparency. How do we identify hallucinations by model drift errors, inappropriate use? So our role as internal auditors not to resist AI. Our role is to make sure that speed does not replace skepticism, automation does not replace accountability, and data does not become evidence simply because it is generated from AI tool. Thank you.
Thank you so much, Ms. Zainab. Michelle, I think you're on mute.
Yeah. Hi, good morning, everyone. Myself, Michelle, Audit Manager from Crowe. Our next section is on audit quality under increased regulatory scrutiny. I will briefly set the context on why audit quality remains under close focus before moving into a practical discussion. Why audit quality is under closer scrutiny? When we talk about the increased scrutiny, the focus is not only whether audit documentation is complete. The real question is whether the right risks were identified, whether key judgments were appropriately challenged, and whether sufficient appropriate evidence supports the conclusion reached. This is particularly important in areas involving significant judgment, such as estimates, assumption, valuation, impairment, provisions, revenue recognition, going concern, like this on depending on the entity. Another important area is professional skepticism. This does not mean assuming that the management is wrong. It means maintaining a questioning mindset, corroborating key information, and constructively challenging significant assumptions where needed. Finally, when an audit or control observation arises, the objective should not simply to close it. The aim is to understand the root cause and implement sustainable improvement. In short, quality is not inspected into an audit file. It is built through disciplined decision across the audit process. From findings to better practice. This theme brings us from identifying findings to improving the practices. They require audit readiness throughout the year, constructive challenges of significant judgments, meaningful root cause analysis, and effective audit committee oversight. To bring a practical perspective to these areas, we are pleased to have with us Ms. May Esteban, Accounts Manager at Sharjah Insurance Company. May brings valuable experience from a regulated sector where governance, reliable reporting, and audit readiness are particularly important. Ms. May, from your experience, what practice most strengthen audit readiness and financial reporting quality throughout the year? Over to you, Ms. May.
Hello, everyone. Good day. It's such a great honor to be here to speak. Really, I was so nervous, but at the same time, excited to share with you some insights from an insurance company. Let me just share with you my screen. Just a second. Okay. So, in an insurance company, scrutiny feels higher because other aside from we are being one of the financial services, also we are a public listed company, and we have monthly reporting, quarterly reporting to the CBUAE, and really as an insurance company, scrutiny feels higher because the business is full of estimates and judgments. It is not only the question of whether the final number is mathematically correct. Regulators and auditors also asked whether the governance around the number is strong. For example, who prepared it, who reviewed it, what data was used, were assumptions approved, did the regulatory return, financial statements, board pack, and actuarial schedules tell the same story. This is where the audit quality becomes very practical, and a good audit is supported by a clear trail. So the first observation is that audit trail matters as much as the total. In practice, a schedule may be technically correct, but if it is difficult to see who prepared it, who reviewed it, what source report was used, and why a change was made, the auditor still has a quality problem. This is not about making extra paperwork for the sake of it. It is about allowing another person to perform or understand a conclusion. A simple example, a reconciliation is done, but there is no review note and unresolved differences are not clearly followed. The number may be fine, but the evidence is not strong enough. For me as a previous auditor also, I'm an ex-auditor, EY auditor, and now I'm in a private firm. So I was able to understand what the auditor is looking at and what can I help as a client. Before, when I was an audit, I face a lot of clients wherein they just send schedules and sometimes it's not tallying up, or they're just sending it for the sake of providing it. But now as a client, on a client side, I want to reduce this burden to the auditor so that they can focus more on what is much more important rather than just tallying the schedule. So basically, we are applying it now here in our company, and hopefully that some of my inputs can also influence your inputs. So second observation is, when we are making an estimate, we need to have a clear why you are making that estimates. Normally, this is what the auditors is asking us, why you have this assumption, why you have this estimates. In insurance, many balances are judgment heavy. Claims reserves, reinsurance recoveries, investment valuation, EZL, tax position, and going concern assessments all involve assumptions. Auditors are expected to challenge those assumptions. The challenge is normal and it should not be seen as personal. From the client side, the best preparation is to document the basis of judgment early. What data we used, what changed from prior period, what sensitivity we considered, and what management concluded. So here in our company, sometimes new hire will come and they will say why we have a lot of documents, why we need to sign a lot of documents, because we are preparing ahead before the auditor comes. We want all the estimates, judgments, specifically complicated decisions to be noted, to be signed by the seniors or whoever is in the governance. So judgment is acceptable, undocumented judgment is fragile. So the third observation is that contradictions often appear at the bridges. A number may look right on one schedule, but when it is compared with a general ledger, subledger, actuarial file, regulatory return, or board pack, inconsistency can appear. This is why audit quality benefits from early bridge control. So before the audit team asks, before they give us the audit requirements, so management can already compare the key files and explain the differences. For example, there is a difference in aging, late manual entries, different mapping logic. These are not wrong, but we just need to document it. So a disclosure number that was updated in one place but not on the another. So if we keep all track of those and explain to them properly, it will help them increase or have a more audit quality. So a finance team can support audit quality without compromising the independence. So management, client should prepare its own schedules, judgments, reconciliations, and explanations. When I was in audit before, the client will only just give me trial balance and general ledger, and I will make my own schedule from that. So who learns about the company? The auditor. But if the management can be able to prepare their own schedule, own reconciliation, own explanation, they can understand more the company, and the auditor's role is to evaluate and challenge them, not to create them for the management. And the practical actions are simple: discipline, closed, evidence packs, judgment papers, an issue tracker, and early discussion of complex areas. So when the auditor comes here, they will not say, your schedule is wrong and your TB is not matching. Instead, when they come here, we will immediately have early discussions of the complex areas. So this reduces the year-end and quarterly rush and help both sides focus on the real, not just missing support. So the good challenge is not criticism. In a regulated environment, challenge protects everyone. When auditors ask why an assumption changed, whether there is a contradictory evidence, or what could change the conclusion, the best response is not to be defensive. The best response is to show evidence, explain judgment clearly, and escalate early when something is unresolved. And lastly, the key lessons, 5 lessons I also learned while I was doing this presentation is that document before you explain. So sometimes I will just give the necessary documents to the auditors, and sometimes I was like, why they're not asking? Why they don't have too much question for me? It's because I already given them sufficient documents to back up all my schedules, all the estimates. So reconcile before you defend. So before we give something to the auditor, at least try as much as possible from our side to reconcile the schedule so they don't waste too much time. I know it's still important to check, but at least it will reduce the burden. Disclose uncertainty early. Keep one source of truth. So we need to keep all the records the same and treat audit quality as a shared discipline. So it's not, okay, it's your report, it's all up to you. No, it's a shared discipline while keeping responsibilities clear. So my closing line is, in a regulated industry, the best audit file starts long before the auditor asks for it. So that's it for me. Thank you again for letting me be part of this event.
Thank you very much, May, for those thoughtful and practical insights. The key takeaway is that audit quality is not created at the end of an audit. It is supported throughout the reporting and audit process through sound judgment, professional skepticism, robust evidence, effective governance, and timely action on findings. We will now move to our next section, the future of external audit, continuous assurance, and real-time reporting. Thank you.
Hi, good morning, everyone. A warm welcome to you all. I'm Rituja, Assistant Manager External Audit based out of DIFC. As Michelle said, my topic for today is the future of external audit, continuous assurance, and real time reporting. Audit has always worked the same way. More or less, we visit once a year, we look back, test a sample of what has happened. But that's changing. New rules are pushing forward looking estimates, like IFRS 9 stating about the expected credit losses, or IFRS 17 on insurance liabilities. Even sustainability reporting is now expected more frequently. At the same time, technology enablers like AI, machine learning lets us test the entire data sets continuously, catching risks as they happen instead of months later. So the future isn't annual check-in. It's more of a continuous assurance, with our judgments focused exactly where it matters, like the assessment of estimates, going concern assessment, or assessing the fraud risks while AI handles the volume part. To take us deeper into this, I'm pleased to welcome one of our industry leader, CA Gautam Chand Jain. He's a chartered accountant with over 24 years of experience of finance leadership across UAE, India, Europe, and Saudi Arabia. Currently, he's an associate director, finance and accounts at Rack Ceramics, a publicly listed entity on Abu Dhabi Stock Exchange in UAE, which gives us an idea that he's having his fair share in regulatory compliance and audit management. Further to add, he's also a secretary of Institute of Chartered Accountants of India, Russell Khaimah chapter. Over to you, Gautam.
Thank you, Rituja. You share. My screen is it?
Yes.
Good morning, everyone. Thank you for inviting me and the warm introduction. Before I begin, I would like to clarify that the views I share today are entirely my personal view. I'm not representing or speaking on behalf of any of my employer or any company in which I am associated. I will keep this session very simple and practical. The future of external audit is not only about the intelligence or the dashboards. It's even about the giving confidence early. Today, audit is still mainly linked with the year-end financial statements, but the business risk, transactions, controls, and the reporting expectations move throughout the year. So the question is, how can audit become more timely without losing independence, professional judgment, and the quality? I will cover the shift from traditional audit to continuous assurance what real-time reporting means in practice, efforts implications, and what finance team can do for readiness. The main change in the audit is moving from the mostly backward-looking experience to the more current and insight-driven process. Traditionally, audit focused on historical information and the year-end evidence. In future, on in future, more evidence will come from the system, controls, reconciliations, and expectation reports available during the event. This does not mean that a statutory auditor opinion disappears. It means the preparation of the audit becomes more continuous. Finance team will need cleaner data, stronger control, cleaner documentation, and the better explanation of the accounting judgment. What continuous assures really means it. The continuous assurance should not be misunderstood as auditing every transaction all the time. A useful way to explain it is this continuous assurance, providing ongoing confidence that important system, process, control, and people are working reliably. The focus should be the risk that matter most. Technology helps, but technology is not objective. Objective is confidence, earlier issue identification, and a better governance. Real-time reporting also need practical definition. In financial reporting, not everything can be real-time because the estimates, provisions, consolidations, impairment, and the tax required judgment and review. For me, real-time reporting means more than current and the controlled confirmation that allow management, auditors, and boards to see the expectation earlier. The simple flow is source data, automatic checks, exception reporting, and management review and audit evidence. How external audit will change your life? The external audit methodology will change in 5 simple ways. First, risk assessment will use more data singles. Second, control testing will become more frequent where systems allow it. Third, the auditor may test larger population instead of the only small samples. Fourth, evidence will include data entry linkage, report logic, and access controls. Fifth, but last, auditor will spend more time on the judgment area and explaining the exceptions. Technology can support the audit process, but professional judgment and the question mindset will remain central. IFRS. IFRS is a very important tool to the discussion. IFRS 18 will replace IS 81 and is effective for the annual period beginning on or after 1st January 2027 with earlier application permitted. I would like to inform all of the members available here that Rex Ceramic PGC has adopted earlier to introduce its subtotals, the statement with the profit and loss, including operating profit and profit before finance and income tax. It's also required disclosure of the management defined performance measures. This means preparer auditor need to focus not only on the numbers, but also the presentation, reconciliation, and the clear disclosures. The benefits are clear, but the challenges are also real. The benefits includes earlier issue deductions, better audit readiness, less year-end pressures, and better conversations with the audit committee. The challenge includes poor master data, manual reconciliations, weak documentations, unclear ownership, cybersecurity, and over-reliance on the tools. My personal view is simple. Don't digitize chaos. First standardize the process and then automate it. From my own finance side experience and my personal perspective, the biggest improvement comes when audit evidence is built into the normal monthly process. For example, AI-assisted IFRS compliance review can help identify missing disclosures, inconsistencies, dates, and the cross-referencing gap. Automation of the receivable aging and the ECL working can improve the consistency in the audit trail. However, these are the general observations and should not be understood as a comment on the system, practice, and the position of the specific company. Management must always validate the output. The tool can assist, but management owns the financial statement and auditor owns the independent audit opinion. Let me close the key takeaway. One, audit will become more continuous, but it will not become a less professional. IFRS reporting will become more structured and the presentation focus, especially in the IFRS 18, is digital reporting. Three, but not least, trust will still depend on the people, management, ownership, and auditor judgment. Strong governance and the transparent communication. Continuous assurance is not about replace the audit, it's about making trust available earlier. Thank you. Ritija, over to you.
Thank you so much, Gautam. I think let's move on to the other topic, the ICOFAR.
Yes, a very good morning to everyone and a warm welcome. To introduce myself, I'm Priya Sebastian, Manager Internal Audit GRC, and with me I have my guest speaker, Mr. Issam Elashwal, who will be speaking on internal control over financial reporting. To introduce Mr. Issam Elashwal, he brings over more than 35 plus years of experience in corporate governance, internal audit, risk management, and financial leadership. Today, he serves as the financial advisor for both Sharjah Airport Authority and Sharjah Asset Management, and he sits on several board committees. And he's a certified public accountant and a certified trainer, a certified arbitrator. Now, quickly coming to the topic, internal control over financial reporting. So it is basically the system of governance, policies, and controls that ensures that the organization's financial statements are accurate, complete, and reliable. In simple words, it's what stands behind the numbers, making sure that the company's financial reports are can be trusted by the board, its investors, and its regulators. And it's worth remembering that any reporting failure does not happen because of the accounting standards themselves, but because of the weak controls behind them. So without further ado, let me welcome Mr. Issam to take us through in a more detailed manner.
Hi, everyone. Thank you, Priya, for this introduction and for this opportunity to meet our colleagues today. Actually, before we start the slides, today, inshallah, we are going to explore one topic. It may sound for some people in US, it's something like SOX. Most of us maybe hear about SOX, but this SOX is not working here in UAE. It's a regulatory requirement in USA. Parallel, IASP tried to find some tools equal to SOX, but it is not a regulatory requirement. This brings us to what we call ICOFR, Internal Control Over Financial Reporting. Personally, I prefer to use the term ICFR instead because it makes it easier. If we go to slides, the first question we have to raise, what is ICFR? Priya said now how she make this definition. Actually, ICFR, the Internal Control Over Financial Reporting, is a process designed and implemented by the management to provide reasonable assurance regarding the reliability of financial reporting, the preparation of financial statement in accordance with the applicable accounting framework. This system or this process designed based on the causal framework, because actually ICFR, it's a type of governance or type of control. So based on this causal framework, we aim to keep our financial statement accurate, complete, reliable, and prepare according to the applicable accounting standard, like IFRS or EBSIS or any other standard we are going to use. The purpose of this ICFR is to improve reporting quality. One of my colleagues talked today about the quality. I think this will add something value to the quality of information, financial information. In the same time, if the quality increase, this will automatically reduce the reporting risk. And in the same time, we will prevent fraud and material errors in our financial information. All this will enhance the stakeholder confidence. Key objective for this ICFR is to find reliable financial statement, to compliance with the accounting standard, to prevent and detect of error and fraud, and finally, to protect the investor. I don't know, you are with me, Priya, for slides or?
Yes, I'm with you.
Okay. Why ICFR is matter? Always the management asking, can management rely on financial information? Can investor trust the published financial statement? Can the board make informed decision? Can fraud remain undeducted? This is a question ICFR is answered. Next. We aim at the end that the organization effective will achieve, ICFR will achieve reliable financial reporting, will reduce the fraud risk, will comply regulatory. In our case here, there is no regulation or regulatory commitment in UAE, there is no. It's different from SOX. For example, in USA, it's a regulatory requirement. Also will give us better business decision and strong corporate governance. As I said initially, this tool or the system, actually it's a governance system. At the end, the investor and stakeholder confidence will be increased. Next slide. So now, I believe that we understand what is ICFR framework. What is the framework for this one? It's actually, it's a 5 component. First one is the control environment. As we said, it's a control tool and a governance tool. So the first step to establish or to develop this ICFR, we have to find or to define the control environment. Control environment, it is not a rule for a certain department or section. As you know, control environment is every part in our organization, all department, starting from board until the last staff in our organization. Next step is risk assessment. We have to assess our risks around the organization. If we talk about risk assessment, automatically the next step is to control activity, because the control we are assessing the risk to find control activity to control this risk. Next is the information and communication. After we establish the control environment, we did our risk assessment, we defined the control activity, we have to communicate all these results through our communication information and the communication tools. The latest step is monitoring, because ICFR is a continuous activity. It is not like something we will do once, then left. No. Every year or every quarter, we have to review all these 5 steps, and maybe we make some changes. So the monitoring activity is a part from our framework for ICFR. Next, please. So if we go to the same 5, just to say the financial reporting risk rule is the identify risk. Regarding the design control, the rule is to find and identify the key control. Then implement the key control we defined up. Then report, this is a reporting side. Again, monitoring is correct action or to take correct weaknesses, then continuous monitoring. Next. So the journey for financial reporting is the business transaction. This is the first step in any business. Recording this transaction, processing, then summarized through financial statement. Management review will review this financial statement, then external reporting through either external auditor or any other regulator. Here, I would like to touch important area regarding the risk area for a certain aspects in our financial reporting, like revenue recognition. Always we have some mistakes or misstatement revenue, so we have to take care about it. Regarding journal entries also, many cases we found some fraud and manipulation. IT is very important area also. IT control is an important area. Segregation of duty is an important area. Financial close process also is an important area. This is the main or the big areas we have to focus based on my experience in previous years. Next, please. طبعا here this is a control effective control measure. We can go to next because I believe that the time is running. Here in this chart you can find financial reporting, whose governance for financial reporting, starting from employee from down, then the process owner, executive management, audit committee, and lastly board. Success factor for effective ICFR is 5 areas: governance, people, internal audit, process, and technology. My colleague today talk about the technology in many sessions, and again I am agreed with them. Technology became a very important area now, and this technology will cover all this ICFR process. So we have to take care about the ERP control and the automated control and data analytics. Next, please. I'll pass this prior. Yeah. Here, this is the last message I would like to bring it to your attention. Remember that ICFR is everyone's responsibility. It is not management decision. It is not just a system we are doing once, then left it. Second message, I'm talking about the strong control will create reliable financial reporting. Third message is the effective ICFR will support the governance and the compliance around or across our organization. Last message is that continuous monitoring is sustained long-term effectiveness. Why I believe this is the final key takeaway or final messages I can bring it to your attention. Thank you for this brief about this topic, and which it need too much talk, but it need a separate session for talk about it. Thank you, everyone.
Thank you, Mr. Assam, for those valuable insights. That was truly an insightful session and a clear reminder that reliable financial reporting is built by design through strong internal control, sound governance, and a culture accountability across every level of an organization. So we are grateful for your time and expertise today. With that, let me now hand over the floor to keynote insights and closing remarks.
So I would like to invite Mr. Michael Maher. He's ACCA Member Advisory Committee, KSA. So over to you, Mr. Michael.
Thank you, team, and thank you for the invitation today and joining such a great webinar where even for myself, I got a good benefit and a good knowledge coming from different colleagues today. So let me share my screen. So can you see my screen now?
Yes, we can see.
Okay, so today, as my colleagues discussed multiple things in the webinar, like the audit is moving from the annual testing rather than having one-time audit per year or quarter audit to continuous assurance, as well from the sampling approach to even full population analytics through the AI and the use of technology as enabler, as well even from the audit itself, rather than focusing on the financial statements only, to broader trust, to give the management a much better trust in not only the numbers, but the operations, the ESG, the AI, the controls environment, and the data governance within the company. As well, from junior heavy execution, that even the old generations of audit are used to it, to more judgment-led and tech-enabled assurance. So the AI and the technology tools will be used as enabler to benefit the audit process rather than being replacing the auditors or replacing the accountants as being revealed currently in different situations in the market. Okay, so the profession itself is not only changing the tools, it's redefining the skills needed to create the confidence in the current complex market. So let me clarify the future SSA qualification. Okay, the update that's coming to this the SSA, how it's signaling and how it's matching the market requirements. So the SSA qualification and the updates coming on is preparing a future finance professional where not only the technicality, the technical capability of that person is the core thing. It remains a foundation, but again, employers increasingly need someone with commercial thinking, judgment, as well technology and wider organizational value, rather than only focusing on debit, credit, or applying standards. Okay. Another point is preparing for future-ready talent. So the updating or designing the new capabilities that is required by the market, as well helping the employers to find capable candidates and capable, adaptable finance teams. Third point is the technology and AI. Now in the SSE, we are embedding the AI and the emerging technologies as part of the SSA syllabus in the new SSA papers. Another point, beyond the technical knowledge, we have greater emphasis on communication, the ethics, leadership, sustainability as a new topic which is being introduced in the SCCA updates, as well the business understanding and problem-solving skills, which is required on daily basis in our complex operations. Okay. So currently, if we are discussing about the audit industry now is having a different requirement, and the job market is having also a different requirement. The market demand now is looking for digital finance, analytics, IFRS discipline by companies, ESG reporting, even controls and governance, and a lot of things which is complicating the industry itself. So the auditors are moving from the substantive testing to data-led testing, continuous assurance, as well, using the AI and the technology as enabler to even provide more assurance and continuous assurance to the companies. So the SSA response, or the SSA, how it is matching this requirement. So the SSA now is the redesigning the certificate itself, where we are embedding the AI and the technology, the sustainability, and to match the market requirements. Okay. As well, if we checked another requirement from the market, employers now need professionals who can translate the standards and systems into business confidence. So not only just reading standard, accounting standard, which is like a pure law, and implement it. It's just how we can make it fit to our operation, how we can make it easier for understanding. So audit teams now have should understand both how to do the audit and the assurance methodology, and even how businesses actually operate, not just pure assurance. Okay, so the SSA now is like updating the employability modules, as well as the experience requirement linked to strengthen the workplace readiness, not only just for exams. Okay. This is the new structure of the ACCA papers, where you will find it is now having 4 levels: foundational level, knowledge level, expertise level, and strategic professional, where you can have multiple papers you can choose from. And as compulsory paper now, the business and sustainability reporting is part of the new updates from the ACC. Okay, for the audit profession, how ACCA, or how the strategic professional levels in the ACCA will add value. So we have now 2 papers, audit and assurance professional. Okay, as well, the new paper, which is totally new and will be presented in the ACCA during the coming year, which is the data science professional, which is a new paper where you can use the new technology and the AI, and how we can do proper governance for all of these new tools to be embedded in our accounting and audit process. So the future auditor will not only work on substantive testing as used to be. Okay, so a lot of things he should focus on: AI and data analytics. And now the companies, a lot of companies are using the AI. So how the auditor will manage this, and how it will make sure that it has proper controls, no data leakage, no data breach happens during the process, as well embedding the controls and risk to make sure that the proper controls will minimize the financial risk in our financial statement. As well, having business insights. So rather than communicating technical issues for implementation of accounting standards, it will have even business insights to give broader benefit and broader value to the audited companies. Okay, so for employers, how SSA will support the continuous learning of our teams. So you have CPD, where you can attend sessions like this great webinar, and this will add value to. We have employability modules, which is a new part, okay, coming to match the market requirements with the capabilities in the SSA certificate itself. Okay, as well, of course, future-ready topics like AI, digital technology, sustainability. So all of these topics, you can find a lot of articles on the ACCA website where you can get even proper business insights as well, practical experience from these articles. Because again, these articles is even written by people who are in the field, not only academic people. So the future auditor will not be defined by the tools they use, but the trust they help create to the companies they audit. So rather than looking only to the numbers, even they will look to the business itself, giving insights, the controls, the management, and how the management is performing. So as we close today's webinar, one clear message stands out. The future of audit is not about technology replacing professional judgment. It's about technology, and this technology is raising the expectation of what auditors and finance professionals can deliver. It's now the game is totally different. Rather than having the normal generic reports, the game is totally different. We are moving from periodic audit procedures to more continuous assurance, from sample-based testing to data-led analysis, where you use the technology tools to enhance the reporting process, and from financial reporting assurance alone to broader trust and agenda covering the controls, ESG, AI, and data governance and data integrity. From my perspective as an ACCA member advisory committee member in Saudi Arabia, this is exactly why the future ACCA qualification is so relevant. The redesign of the certification keeps technical rigor and ethics at the heart, while placing stronger emphasis on employability, AI, and technology, as well as sustainability, reporting, and leadership, which is really required nowadays in the market. It even introduces a new data science professional option and makes sustainability reporting as a core exam. So now data science is not like something you need to read or to know about it. It's a must now because the market is totally changing. So for students and members and employers as well, the message is simple. The market is asking for professionals who can combine finance and technology, governance and strategic thinking. So ACCA is evolving in that direction, and our commitment to continuous learning must evolve with it. So thank you today for this great webinar and letting us reveal the updates of the ACCA certification.
Thank you, everyone. That's the end of our webinar, and we look forward to seeing you again in the next courses that Crowe will host. Have a good day, everyone.
Thank you.
Thank you.
Thank you.